We started this programme with some weakness in the dollar. That seems to have paired even just in the last 50 minutes or so. And Guy was making the point at the top of the programme that maybe the market's not reacting all that much. Certainly FX market's not reacting very much to the Lisa Cook story. Is that because we knew it was coming? Maybe bond markets are reacting a little bit more? What's your takeaway so far?
Good morning, Anna. You're right. Markets are largely shrugging this off. Initially, they did react to the headlines. The reason we've kind of erased those moves is because, first of all, we got the report that Lisa Cook will challenge the kind of decision. And the evidence is very much they'll likely win. Trump has no just cause for allegations of fraud. They're not yet proven. Now, even if they're proven, then he can remove Lisa Cook. But that will take some time. So it's likely if Lisa Cook sues to reinstate her job, she will win that fight, which means Trump's not going to get the change in the Fed on any immediate basis, which means that from the Fed's point of view, it's the status quo. So you shouldn't get any direct impact on the front end yields in the dollar. However, you've got to make an assumption now. Does Trump kind of go, oh, OK, I was wrong and back down and forget the story? That's not been his modus operandi so far. So you've got to assume that he's going to double down on his public attack on Fed independence, Fed credibility, and that is an undermining of US institutions. So it's not a set binary moment just yet, but it's yet another blow, and a big blow. It's a really clear kind of politicized move here because he doesn't have just cause. It's not a legal process here. An attack on US institutional credibility. So that is ultimately bad for long-end yields, bad for long-end bonds, which will see long-end yields rise. It'll be bad for US stocks. It'll be bad for the dollar. It's not yet a tipping point, but there will come one because this is another negative for US assets.
Is the trade war restarting as well, Mark? We've just been talking about India. We can come to that as well in more detail in a moment. But we're now talking about digital taxes once again. You've got all kinds of other issues being thrown around. Are we back to having to price in trade deals that we thought were done, maybe not being done?
I don't think the trade war ever really went away. I'm not sure war is really the right kind of word for it. It's a US attack on the global trade system, which the global trading system is so far being relatively resilient to. Are they going to continue suffering more attacks? Almost certainly. I mean, Trump, even before this one, was talking about his semiconductor chips are coming in another 2 weeks. His always constantly promised maturity for these threats. So, of course, we know that trade is going to continue being a problem, and it's going to continue costing businesses and consumers and affecting global growth.
Mark, in our last 40 seconds or so, there has been a question of seasonality in September. Historically, the market always tanks. The equity market always tanks in September. What do you think could be the potential catalyst or the straw that breaks the camel's back here?
We have a lot of catalysts, don't we? We've got NVIDIA earnings, we've got inflation data, there's core PCE, but I think at the CPI one's even more important. We almost know it's going to be higher. It's going to undermine the idea that the Fed's going to cut, which is what everyone's betting on at the moment. We've got jobs data to come. Now, it's an interesting one, the jobs data, because it comes really weak. People will get really worried about the US economy and say, OK, those rate cuts that are already priced are going to come, but maybe we've got a recession coming. If it comes in strong, well, then it completely undermines those rate cuts. So either way, it seems like lose-lose for stocks. Plenty of catalysts, negative catalysts on the horizon in the weeks ahead.